going on, everybody? Nice to see you. I apologize so much for, what felt like multiple technical issues. I think there was a couple conferences that happened on Fridays, and that caused us to miss a couple of the shows. And then last week, I've been dealing with this internet issue for like weeks at a time, like where my connection is just like randomly dropping out. And it's shutting my connection completely down. And I found out today, actually, that it was, or yesterday, I found out it was my modem. There's an issue with the modem that I have. Finally got it figured out. I ordered a new modem yesterday. It was supposed to be here today, but it's not here yet. We've been having storms and stuff all day, so hopefully we'll be good. But again, I apologize for the issues. I'm excited to be back. We have lots to talk about. There's been a couple of weeks since we last discussed options. Let me just give you a quick introduction to let you know who I am. My name is Brad. I am the host of Technically Options. I am a full-time options trader, retail independent trader. And as I said, full-time options. I do primarily trade options. I really don't trade many commons. I have not bought a single share of a stock in my day trading account for, I don't even know how long it's been now. A really, really long time. I switched primarily to options about 8 months ago, just because options I feel more comfortable with. I know that might sound weird to most people, but to me, I am more comfortable trading options. I am, I know, like I said, I know it sounds weird to so many people because, options are tough. They're, they don't, there's a lot more to an option moving than there is, buying a stock low and hopefully it spikes. There's a lot of things behind the scenes that work with options and cause the price to move. And that's one of the things that we like to talk about here. We don't like to get too advanced. We like to be more of an introduction to options style show. We talk a lot about, a mixture of the reason why it's called Technically Options is I am a big technical analysis fan. And I like to combine the knowledge that I have of technical analysis with options trading to increase my success as an options trader and to help us get in at a better position and to understand really why we can use technical analysis as a helpful tool to trade options more successfully. Now, again, I'm not saying that. Let me just send a note here real quick. I'm not saying that technical analysis is perfect. Let me also put a disclaimer up about that because I know a lot of people, they don't like technical analysis. They think it's just, just a lot of lagging indicators that predicted the past. They don't help you with the future, yada, yada, yada. I get that. Believe me. I do not rely 100% on technical analysis. And one of the things that we're actually going to talk about tonight is one of the big things that I do when it comes to options trading. Now, I am primarily a scalper of option contracts. I do not hold contracts in order to get those shares. Okay, so we're never going to talk about like exercising options. We're not going to do anything crazy like that because again, I am primarily a day trader of options. If I am buying an option at 10 o'clock, I'm trying to be out as quickly as possible as that day. If I am holding a contract overnight, there's got to be a real good reason. Now, with that being said, I do play long-term options that I hold a little bit longer. Most of the contracts that I play are same week. I scalp weekly options of the big boys like SPY and Triple Q and Tesla and all the other, AMCs now is a real easy one to scalp if you follow patterns and stuff like that. I am playing primarily weekly option contracts. Now, today was the third Friday of the month. So today we actually had option expiration month, day of the month. That means that all of the monthly options expired today. So if you're watching some of the contracts and you notice that maybe the price action was a little bit different, that's why. The third Friday of every month, every stock has their options expire. Now, some of the other ones, they have what's called weekly options, and weekly options are more volatile. There's more volume. You can trade those a lot easier. You can day trade those. You can scalp them and things like that. There's a big difference when it comes to playing weekly and non-weekly, the monthly options. The reason why, again, like I said, primarily is the people that are day trading options are playing the weeklies. Okay. Now, if you are new to options, let me also just say that too, because there's another thing that we like to talk about as well. If you are new to options, I primarily do not recommend scalping. Okay. Let me say that again. If you are new to options, I primarily do not recommend scalping. Why? Number one, scalping options, you need to be on top of your position the whole entire time. A lot of people, they want to try to add on options as a hedge to their portfolio, or maybe as a longer play if they are not able to monitor their positions on, on a regular basis. And that's fine. Listen, we're going to talk about stuff that'll help you out with that as well. But if you are saying to yourself, I do not have the time, or I do not have the luxury to sit in front of my positions all day long, that's perfectly fine. Okay. Admit that first, instead of trying to scalp options and it's just not working out for you, because you will learn really quickly that when you are trying to scalp options, they can go against you just as easily. And that's another thing that we have to keep in mind too. I am a full-time options trader. I trade primarily options. That does not mean that I am some like cajillionaire, and it's actually the exact opposite. I'm trading options primarily because that's what I'm better at. I'm not trading options because I am hitting 500% runners all the time. That's not even part of my trading strategy. I am looking for 10, 20, 30% runners, like small little gains. That's why, again, I'm a scalper of option contracts. I'll play anywhere from 15 to 20 trades per day. I'm buying anywhere from 5 to 10 to 50 contracts, depending on the price. But my goal is to capture those small little movements instead of waiting for those overnight or 5-day or 2-week swings where you buy a contract for 10 cents and it runs up to, 250 or 450 or whatever the case is. Yeah, we have those from time to time. Absolutely. But again, when I sit down in front of my screens every single day, my goal is to get in on a contract and out within minutes if I really can. AMC is AMC is a prime example of what we've seen. I feel like I'm just like confused what a lot of people are going to do with when AMC is no longer around. It's just, it's crazy to see that all the hype that's been around it. Again, I've only scalped it. I'm not a long-term ape or whatever you want to call it with AMC. I have my own opinions about it. I know a lot of people are making money on it. I made money on it. But my goal with AMC was to get in and get out. I'm not parking any money in that thing. I primarily scalp the contracts, but that's the big stock right now. People want to play AMC because it's moving a lot and there's a lot of action on it, and you can get in and you can watch that contract spike, 100%, 300%, depending on where you get in at. And absolutely, if you are looking to make a quick buck, AMC, I mean, if you watch AMC support and resistance, like let me see if I can just pull this up real quick now that I've got I didn't really want to talk about AMC, but I want to show you one thing really quick. I mean, with AMC, I mean, you can just pretty much, this is a support and resistance setup on TradingView. You can pretty much play the bounces all day long. And a good thing about the support and resistance as they are measured here is this red line right here. You can see that it's dotted. This means it was broken, that resistance was actually broken previously. You could have played here on this bounce on your support right here, and you could have played this touch. You see this candle on the 1 minute right there. You see how it bounces off that top resistance? That next candle, as soon as you had confirmation that candle was closing above that top resistance, it ran. You got at least a 58 to a 59.44. I mean, that doesn't sound like a lot of money, but on these AMC contracts, they're moving like, depending on which contract you got in at, they're moving for every cent that AMC was moving, the contracts are just going crazy. So incorporate that. This is a prime example of my favorite things to do with technical analysis. Now, what I've done as a trader over the last couple of weeks, maybe a month or so, if you remember a long time ago when I first started on Benzinga, shout out Benzinga. I love you guys. Let me just say, I am so thankful to be a part of the team here. I'm truly honored. It's Benzinga, in my opinion, is the best news platform, media service for retail traders. We are very, very lucky to have Benzinga around because our other options are, that 4-letter word that many of you know that I really just can't stand, the big media companies. Benzinga really goes above and beyond for the retail trader. And so I'm grateful to serve here. But if you remember when I first started at Benzinga, one of the things that I always talked about on any of my lectures or any of my shows or anything was the EMA crossover that I used to play as an order of scalping. I've really actually kind of gone away. If you look on my chart, you don't even see the EMAs anymore. I actually have them turned off most of the time. What I've really done since I've kind of come to as an options trader, again, I've been trading options primarily for a while now, but these last couple of months, specifically the last month and a half, I've kind of developed myself into the ops trader that I am looking to be as I progress farther. And that options trader, just kind of give you a quick explanation, is somebody who relies on support and resistance, number one, somebody who relies on price action, and number three, the main thing that I want to talk about tonight is volume. Okay. One of the biggest things that I do as a trader, let me actually pull up Benzinga Pro here. Shout out Benzinga Pro, the best news alert service, unbiased opinion. I don't even care. You can say, yeah, you're affiliated with them. And I am, that's true. But I don't ever I never say anything about a product that I don't like. If I didn't like Benzinga Pro, I would not use it. They're not, telling me that I have to use this software. They've left it up to me if I want to. I run it all day long. I've got it on one screen. I listen to the squawk all day long. The alerts that I get, the volume alerts, I cannot tell you enough how much I've actually made just by using some of these alerts. And that's the thing that I want to talk about tonight specifically. And this is the page right here, is the unusual options activity. Now, you might be asking yourself, what is unusual options activity and what exactly does that mean? Unusual options activity are alerts that bring in these large amounts of call or put volume buying or selling or whatever the case may be. These alerts that are on the screen right now, I want to show you. We've got them sorted by the let me see. Is it the size? I think I have it sorted by the size. Let me get back up to the top. Yes, I have it sorted by the size. Okay. So let me just kind of give you a quick overview of what the platform looks like so you know what to see here, or you know what to look for here. This is the unusual options activity for today. Now this comes in real time. Okay. Now you can set this up to come in by time. And so you can actually watch it on here. Let me show you. What was I gonna show? All the other, let me show you the other unusual options page. This is another one that you can use as well. This is showing you in real time the actual order flow of what the options activity is for today. Another thing that you could do is you can go back and you could pick a calendar date, and you can actually look at per day on what the activity was for that day. So one of the things that I watch all day long is I watch this unusual options activity flow here. Now this page right here, basically what it's going to show you is it's going to show you the symbol. So SPY, there was an option alert for the August 20, 290 puts at the ask. 4,729 contracts were bought at 63 cents versus an open interest of 1,587. So basically, to kind of like summarize that and tell you what it means in the very easiest terms, there were 1,587 contracts that were open. That's what open interest means. It means how many contracts are open that have not been exercised yet, versus this order that was for 4,729 contracts in one sweep. Now, puts at the ask means somebody paid the ask price for it. It was not like whenever you see above the ask, that's something that you need to follow pretty quickly, okay? Because above the ask means somebody paid more than what they were selling them, meaning they want to get those contracts as quickly as possible because they're expecting a big move. You can kind of, however you want, like, let me just say real quick, you are able to get a free trial to Benzinga. There is a 2-week free trial through the platform. If you're not under any obligation to continue after the 2 weeks, I just highly Monday morning, sign up for a free trial and watch the options activity. This is one of the best ways that you can get involved with options trading if you are new, okay? Now, let me also say that it can be a little bit overwhelming because this thing is going off all day long. And it's also another thing to keep in mind, unusual options activity is not something that is perfect, okay? Because I've had a lot of people that what they will do is they will see a call sweep on SPY, or they'll see a call sweep on AMC. And it'll be for the $55 ticker, let's just say. There was a 50,000 sweep of the calls, and then AMC went down. And sometimes people kind of look at that and they're like, well, wait a minute. I follow this unusual options alert because there was so many calls that were being bought. And I figured because the calls were being bought, the options were going to spike, and because AMC was going to spike. That's not always necessarily true. Okay. Unusual options activity is something that you add into your toolbox as an options trader. It is not the one and only thing that you use, because what happens, hedge funds, market makers, these big whales, they will sweep. That's why they call it a sweep. They will sweep up a lot of these contracts that are just kind of sitting around in order to throw off the retail trader. That's why when you get one of these alerts, you should not just automatically. Now I'm gonna contradict myself here in a second, so let me preface this. Unless you are familiar with the stock, you should not just blindly follow an unusual options alert. I say that preface because I want to say this next. A couple of weeks ago, Sandal, SNDL, if you're familiar with that stock, SNDL came across as an unusual volume alert on their options activity. I know Sandal like the back of my hand. I know that it is algoed and it is computer traded all day long. It trades in a range. It does not break out unless something causes it to go spike. Okay. When you get an alert on a stock that you are familiar with, like Sandal, for example, and it says there's a high call volume spike, that's something that you can go blindly into, because if you know well enough that the volume spike is going to cause Sandal to get out of its algo. Okay. Because right now, if you were to look at Sandal, it's barcoded like crazy. Let me pull it up. Candle, it's just a nasty looking chart. It's just back and forth, back and forth, back and forth, back and forth, back. See these bars right here? These are all, I mean, it's just nasty algoed computer trading back and forth. No method to it. It's just a gross looking chart. Okay. So with Sandal, when you get an alert like that, if you are familiar, again, now I'm not saying this is, again, please hear me. This is not like a guarantee that it's going to work. When you get an alert on a stock that you're familiar with, it might be like Sandal. Sandal is one of those ones. It trades in a range. It trades a lot of volume because the float's like cajillion 95,000. So in order for it to move a lot, it's got to have what? Volume. And so when you get a volume spike on a stock like that, my inkling, this is me as a trader, I am buying immediately. I want to get into that stock as quickly as I can, because once I get the alert for unusual options activity, I'm already 10 seconds behind, at least 10 seconds behind. But then I still have a chance to beat the other retail traders, and I can get in on a spike. I ended up getting in on a Sandal contract for like 2 or 3 cents, and on options for 2 or 3 cents. I mean, you better load the boat. You better load as much as you possibly can. Held it overnight and it ran to like 13 cents. That's a pretty big return. And again, that's an unusual event. That is not something that happens on a consistent basis, but that's why they call them unusual options activity. Okay. But then again, you're not always going to profit when you are playing the unusual options activity. Now, like I said before, why do I say that? What do I mean by that? Because you cannot just blindly play these stocks. Okay. As one of these contracts came in, let's just say here. So what I have here is I have the orders sorted by size. Okay. So FXI is an ETF. There was a call sweep, or a normal trade, I'm sorry, for 28 days out for puts on the $44 strike. There was 45,000 contracts that were bought in just one person bought them up. But notice the total volume for the day was 45,001. Okay. So this is all the action was in that one play right there. Another one, XLF. XLF is another ETF that is very, very popular. It's an options high volume. It's traded all the time. You could see here, excuse me, the 8/21, I believe, the 63 days to expiration, $39 call. There was an order of 43,500 and an order of 40,119. Okay. They were both the same strikes. They were both the same expiration dates. The total volume, again, you can see that there's a large amount of those shares being traded. So it's really tough. Like if you're looking at all this stuff and you're thinking, well, how do you know how to play unusual alerts? How do you, I mean, because none of this looks unusual to me. Okay. And yeah, I mean, to a certain extent, you are going to have to learn a lot first about unusual activity before you can put it into play, and before you can basically make it a part of what you use as an options trader. So let me just say this, for example. Let's kind of take one of these plays out. Here's Trip. Let's pull up Trip on the chart and see what happened. Do I have can I find Trip by here? No, you know what I'll do? I'll do this. Let's do this way. So Trip. Okay. The 91. So September. Trip. September 17th. And it was the $40 put. Okay. So the $40 put, let me swing this over here. The $40 put on Trip had 15,000 was the total volume. The $35 had 14,000. The $30 had 15. Okay. Now, just by looking at this screen right now and the volume that is going on around here, would you say that's unusual activity? Yes, very much so. And it's very clear to see why it's unusual. Okay. It's unusual, number one, because there's absolutely no other contract that's above 14. Yeah, I think 14 is the highest. Well, there's a 26 down here. Okay, so 26 is the highest. There's another one just found down here. The $50 put is 15K. $40 put 15K. $35 put 14K. $30 put 15K. Just between those, there's over 60,000 contracts just between those four strikes. That is an unusual options alert. Now, with that being said, there's a couple of things else that you want to look at. Number one, it's September 17th expiration, so it's got 91 days. It is trading right now at $41. Your puts again are either 50, 40, 35, or 30. Okay. So this gives you an understanding. Now, this was just today. This volume was just today. It's not like a combination of a bunch of days or anything like that. That volume is just today. Okay. There is there is a reason why there was so much volume. Like there's a reason why people were buying up these contracts. Again, we can't speculate on why. It could be it's something like this. They're trying to throw you off, but to kind of normally I say, let me also, this is not a guarantee. This is not something that happens all the time. But normally, the farther out the contracts are, so a 91-day expiration is pretty far. If there is that much volume, there's a reason why there's that much volume. Somebody is placing a big bet. What I would do after that with Trip, for example, I'm not really familiar with Trip. I would go on and see if they have any earnings coming up in these next couple of months. If there is anything close to this, is there a news event or is there a conference that's coming out that might lead to a big price change? That's one of the things that I'm going to do. On a 91-day expiration contract, I'm not really too concerned about support and resistance levels. I'm not really too concerned about technicals and things like that. I'm not really concerned about price action. First off, I'm not really playing contracts that are that far out. Again, my style of trading is different. So, you kind of do your own, whatever you guys think is better for you. I am primarily scalping options. So a 91-day to expiration contract is not going to be something that I'm going to primarily buy. I do have options that I have that are longer expirations. However, that's not as common for me. My unusual options activity are going to be same week and stuff like that. And I am going to be more focused on the options as they're coming in for that week. AMC, let me just show you up AMC again here, because this is an example of what's going on with a stock that's really moving. Okay, so AMC, the expiration for today. Take a look at the volume that is on AMC for calls and puts. That's that's crazy volume. The highest volume was probably going to be even down here. Now, $145 strike, there was 32,000 contracts sold. Is that a now why are you buying? And let's just talk about that for a second, because somebody will ask me this. Why are you buying the $145 strike on AMC when the contract is expiring today and AMC is trading at 60 some dollars and now it's below $60? Okay. The reason why people are buying those is like I said before, the contracts are spiking like crazy. Okay. They're just going like crazy. At one point, okay, let's see what AMC's was. At one point, its high was $55. Let's go back even farther. Yeah. Okay. So at one point, here. Okay. Look at the price of AMC's. At one point, it was $7.85. Okay. So you could have bought on, when is that? The 7th, like a week and a half ago. You could have bought the $145 AMC. You could have bought the $145 strike June 18th monthly expiration AMC call for in the $7 range. And now the problem, though, is, I don't know if you caught this. The problem, though, is it never got back that high. That was its peak. Okay. It actually, like a good play. Let's take a look at what a good play would have been on this. I mean, buying it at 778 and it running to 15. That's crazy. Oh my gosh. That's crazy. That is crazy. And it was even cheaper than that. Hold on a second. Hold on. It was $4.70. And actually, that's not, it went higher here. You could have at the bottom bought $4.77, the $145 AMC strike on June 3rd, sold it on later that day for $15.79. What did AMC do on June 3rd? Let's take a look at that. I'm curious. I said I was going to talk about AMC, but now here we are. Look at that. June 3rd, AMC went from, oh, that's why. It went from 36 to 69. Wow. Okay, so there was a pretty big range of playing on AMC that day. That's why that contract went so crazy. And again, you went from on 11/15, 603.21, $4.77, 2 o'clock later that day, 603.21, high of, wow, unbelievable. That's crazy, man. That is crazy. Man, that's crazy. You look to contracts like this to scalp. That's all you're doing. Somebody said, how do you stay in your scalps longer? I hopped in one today off the 1 minute chart, but hopped out too early. Then I had another one I hopped out too early, then got killed by a fake pullback. Basically, one of the things that I would recommend doing is trade not from the 1 minute. I think the 1 minute is too noisy. You're going to get a lot of fake pullbacks. You're going to get a lot of noise, and you're going to get a lot of fake signals. You're going to get a lot of price action. Your candles are going to go crazy, especially on a stock like AMC. I'd switch to the 3 minute. I think that's a big help for a lot of traders. I personally do not like the 1 minute. The only reason I trade from the 1 minute is because the action on AMC is crazy. I don't trade from on. I don't trade on the 1 minute on any other stock other than AMC. And even with AMC, I've not really played it that much. This week, I think I traded it 6 or 7 times. A couple of weeks ago, when it was really running, I traded it a lot. I probably had 100 and some odd trades of it. But again, that's just scalping contracts. That's the 1 minute chart that I use. Even then, I'll switch to the 3 minutes on AMC because I get killed by false breakouts, or I get killed by a fake pullback, and then it ends up running. And hey, listen. Another thing that I want to say too is on scalping contracts. Listen, you're going to leave profits out there. That's another thing that people always want to say when it comes to scalping contracts, especially with the unusual volumes plays. Because normally with an unusual volume play, you're either getting hit right now or you're holding and you're not going to get the feedback you're looking for. It really just depends. You've got to be quick with the unusual options activities. I cut my losses really quickly. So if I'm in on an unusual alert and it doesn't come to be within an hour or so, maybe depending on some other things, I might cut that. I might be gone with it real quick. You've got to be okay doing that. You've got to be okay with watching your contract that you bought at $1 and sold for $3. You got to be okay watching that contract run to 6 or 7 or 8 or 5. You got to be okay with that. Because listen, like I just said the other day on social media, and I've said it before on the show, I'm pretty sure, I'm looking to get on base. I am looking to be on base hitter. I am not looking to be a consistent home run hitter. Yeah, I'm going to hit some home runs from time to time. Absolutely. And yeah, there's times that I'm playing a contract and it's getting green candle after green candle after green candle. And I have all these confirmations, and absolutely, I'm going to let it run a little bit longer. I'm going to go beyond my 10 to 30% goal. However, at the end of the day, when I am evaluating my trades, my goal is 10 to 30% on every trade. That is allowing me to be profitable. That is allowing me to be successful. No, I am not some crazy millionaire, and honestly, that's not my style of trading. Absolutely, I have goals of financial freedom, and I have goals of all of money is not the motivator when it comes to trading for me. Yeah, it's a great way to make money. You can make lots of money. You can lose lots of money. The thing that motivates me when it comes to trading is my family, is being able to work from home, is being able to take time off as needed, being able to be here for my wife, being able to be here for my newborn son, to have the freedom to work from home, to be my own boss. That's why I'm in trading. So again, my goals and outlook on trading. However, I do like to teach people this, the ones that I mentor and the ones that I'm teaching and things like that. I'm going to teach my system of trading. I'm going to teach my style, and I'm going to teach you to trade for a 10 to 30% gain. I'm not teaching you to hold for some crazy diamond hands run up that might happen. Listen, if you are in the profit that much that you're taking a screenshot of it and posting it on social media, that's when you need to be selling. Okay. That is a big thing that I teach, is that if you are able to take a screenshot of your profits, you need to be cutting the losses or you need to be cutting your profits and taking those profits, because there's a lot of times people get into these stocks and they run and they run and they run and they think it's going to keep going, and it doesn't, and it's down quicker than it was on its way up. So Miles says, are you buying the exact contract they are buying, or do you look for maybe something closer to at the money or different Greeks to increase probability? Both. Let me answer the second part. Let me mention the second part because that's a really good observation. So a lot of times what I do when I get an unusual volume alert, again, now this is me. I'm in front of my computer screen all day long. I've got, many monitors, so I could just type and type and type and look at stuff all day long. So when I see an alert off something that I like, if it's not an immediate buy, like if it doesn't trigger something for me, my rule, okay, here, let me also just say this too. I'm using Benzinga Pro. My rule is if they squawk it, if it comes across the audio alert, it's normally one of the bigger ones. Those are the ones that I'm probably going to just jump on and I'm going to buy really quickly most of the time. Again, not always. Again, it's not a guarantee. It's not a flawless, profitability system. I'm just saying that when I get an audio alert, when they announce the trade, it's normally something big. So I listen to that. So what I'll do is when I see an alert come through for unusual options activity, I look at the ticker, I immediately pull up that option and to see where it is. A lot of what I do is then I'll explore the other options around them. I might take a look. Now, sometimes, for example, they're going to get you an alert of a contract that's way out of the money, or they're going to get you a contract that is not really very desirable to trade. Why is it not desirable? Well, maybe number one, as Miles was mentioning, the delta, one of the Greeks might not be that good. I'm not buying a contract based upon unusual activity alone, like I was saying. But there are times that when I pull that option up, yeah, it's got a good open interest. It's got a nice volume. The premium on the stock or on the contract is not that bad. And the Greeks are good. My goal when I'm buying option contracts is to increase my Greeks as much as possible, to increase my delta. Delta is what the underlying, the delta number signifies how much the option contracts moves based upon the underlying assets movement. So for every $1 that the stock moves, the delta number represents the price that that option contract moves. So my goal is to increase that delta as much as possible. And when I say increase delta, I mean how many contracts I'm buying. If I'm trying to maximize my profits as quickly as I can, I'm buying 10, 15, 20 contracts at a time. I'm trying to get that delta as high as possible so that I can get that movement to happen as quickly and as there's again, I'm not holding for like a real long 4, 5, 600% gain. My goal is to get that delta up so I can capture a 5, 10, 15 cent movement, scalp it a couple of times, scale out with my contracts, and that's my profit for the day. That's what my goal is. So yeah, absolutely. When it comes to getting these unusual options alerts, number one, let me kind of just refresh what we're talking about here. When it comes to getting the unusual options alert, number one, you are not just going in on these blindly. Just remember that you are not going in on these blindly unless you know of it. There's a certain stock. If you're familiar with it, if you know its movements and stuff like that, and you hear an alert for the volume, and if you want to go in based upon that alert alone, I would also do that. I have done that. And I think that is, on a stock like that, you're wanting to get in as quickly as possible. You do not have time to spend charting and looking up all this stuff. You need to just buy contracts right away. That's number one. Number two, unusual options activity is a resource that you add to your options trading toolbox. Okay. It is not the only thing that you use. It is not a guarantee. It works well with other systems. Okay. So this is what I use as an options trader. It might not work for you. If you are setting yourself up to be a, let's ask yourself this: what type of options trader are you looking to be? Okay, so if you were looking to be somebody who day trades option contracts, then yes, unusual options activity can be something that is useful for you. Let's just say if you're trying to hold 30 to 45 days out, maybe not. It might not be. You might not want to follow the unusual options activity. You might want to just look at like charting. Okay, so for example, as we were watching on the, let's go back over here. You might want to play AMC on your support and resistance levels. Okay. You might not want to look at, what's it called? You might not want to look at any of the unusual volume activity on AMC because, well, another thing too with AMC's unusual volume activity, if you're getting unusual volume activity alerts on a stock like AMC, something is really unusual because now that we've had a couple of weeks of this craziness on this stock, it's based upon its last couple of weeks of performance. So if you're getting an alert on a stock that's moving like AMC, it's worth checking out. There's a reason why. It might be, a thing with AMC now though is everybody is playing the options and there's so much volume on the options it can be hard to tell what's legitimate volume. Again, 39,000 contracts of the $145 strike price were sold today. That's insane. That there's a lot of people that were, and I don't even think it went between 10 cents. I think it was really low. I have to look at the chart again, but there's not much of a reward when it comes to playing a strike that is that far out of the money. So that's another thing that you have to ask yourself too as an options trader. Are you going to primarily trade what? Number one, in the money calls. In the money calls or puts are those ones that are already in the money. Then you have at the money. At the monies are normally 1 or 2 strikes down from the in the money line. They are almost in the money. They have a very good chance of being in the money. Premiums are going to be a little bit lower, but also the delta is going to be a little bit lower too. However, those are going to be higher than out of the money options. Out of the money options typically are much cheaper. They have lower volume, they have lower delta, and they have a lower chance of being in the money. Now, as you kind of evaluate those 3 types of options, then you figure out what type of options trader you are. If you are primarily a scalper of options like me, what do you think the options you should be playing are? In the money, exactly. In the money options are the ones that move the most. They're going to give you the best chance of having a profit on a small movement. They're going to get you a high delta. However, number 4, the premiums are going to be a little bit more expensive. So that's why I also look at the money. I don't go any farther than 1 or 2 strikes down. Maybe depending on what the stock is, 3 or 4. It just really depends on volume, and I have to be actually looking at the contracts and stuff like that. But normally on a scalping of a contract, I'm going as close to in the money as I can with a $3 strike range out of the money or out of in the money to play those. And again, that's because I am looking for quick trades. I'm looking for 10 to 15 to 20 minute holds. I mean, sometimes less than that. I mean, sometimes I'm scalping on 3-minute candles. It just really depends on what is happening with the price action and what the overall activity of the stock is doing. That all just, I mean, you're just going to have to, those are the things that you're going to learn as you are becoming a trader. That's the biggest thing that I'm teaching guys. I am lucky enough that I have a lot of guys that I'm teaching right now, and I'm working with people on options trading, and I'm trying to get them to be, excuse me, I'm trying to get people to be more confident in their options trading, because that's one of the biggest problems people have with options trading is a lack of confidence. They can trade commons all day long, and they understand how the chart reacts. They understand price action. They might even understand the overall movement of what the stock is doing. They can do that all day long. But when it comes to options, you just kind of freeze. You just kind of like step back. You're like, I don't know what to do. This is scary, blah, blah, blah. And yeah, listen, like that's one of the things that you have to respect options. They can go against you really quickly. Like if you jump in on a Tesla call, I say you can go bankrupt. You can go to being a millionaire on one candle, and you really can. There's that much volatility on options, with AMCs and the SPYs and Teslas and stuff like that. These big names, there is a lot of volatility. But those are the ones that if you're going to be scalping options, those are the ones that you need to look at. You don't want to get in on a stock like, let's say, for example, Nano Dimension, NNDM. Right now, it's been in a downtrend. It'll get a little spike, but then it reverses again. Then it goes up for a little spike, and it's reversing again. You are not going to be able to scalp those options very effectively. A month ago, that's all I did was scalp NNDM options because it was in an uptrend. Options were moving. It was really easy to buy contracts cheap and then scale out. But right now, you're not able to do that. Stock's in a downtrend. So that's one of the ones that you need to basically make a list of the stocks that you think you can scalp from. I have a watch list of stocks that are just high options volume. And if you pull mine up here, I just kind of anything that's got high volume. So AMC, Apple, Bank of America, NEO, Pelter, WFC, AMD, Triple Q, Intel, Microsoft, Cisco, Workhorse, Facebook, Oxygen, Uber, Snap, all these stocks right here. These are basically giving me my master list of options that I'm going to try to play. That's one of the things that I really, the best way to describe this, I love running scans on stocks. I love running these unusual options alerts. I love seeing all of this come in. I love watching the tape. I could just do it all day long. The problem that I run into as a trader, though, is when I am trading, I am always concerned about what else is going on. If I'm in a trade, I am more focused on outside than I am on what I'm trading right now. So one of the things that I had to do as an options trader was I had to cut that out. I had to stop running scans. I had to stop paying attention to the big moving stocks. I had to stop paying attention. Right now, again, now let me also say that I've got those things pulled up. I can see them at a glance. I know what's moving. I listen to the squawk all day, so I hear big price spike alerts and stuff like that. I know what's moving. I'm not trying to say that I'm completely oblivious to what else is happening in the market. However, the main list that I'm watching is the watch lists that I've created. That thing that you should do as an options trader. I think it's very successful. I think it can be something that is a successful trait to have as an options trader. Making a watch list of the stocks that you plan on trading on a regular basis. Again, the NEOs, the AMCs, the triple Qs, whatever the stocks are that you think you are, number one, most familiar with. Number two, it's going to give you the best chance to be successful. And number three is going to provide some volatility and volume. You need to make a list and learn that list in and out. What I do, I use TradingView, as you can see on the screen here. I use TradingView for my charting. So on any of the stocks I'm interested in playing, when I go through this weekend and I go through all these charts and I set up my levels and stuff like that, I'm going to start setting alerts on certain price levels. So if I'm waiting to get in on Bank of America, for example, let's just say that as an example. I don't think I'll play Bank of America, but if there's a certain level that I'm watching Bank of America to bounce, and if it breaks that, I'm going to enter a position. I'm setting alerts on any of stocks that I'm watching for something like that to happen. So if it does happen, for example, with Bank of America, if a level is broke, like here on SPY, we're looking at that bottom support. That bottom support was broke. I'd set an alert on that line. And if that alert triggers, I go to the chart and I see that it broke to the downside. That's a put signal for me. That's an entrance for a put. If it's going above the top resistance and it breaks the top resistance, that's something that I'm, going to enter long as a call, and on and on and on, whatever levels you're going to use and stuff like that. But that's a good way to be involved with your stocks without having every single stock pulled up on the screen at all times, because as you know, that's impossible and you shouldn't do that. You should not try to have 20 different charts pulled up. I say that as somebody who's got 4 screens in front of them, but I only have one chart pulled up. I have one main chart that I use. I have a window open of just my unusual options activities and my squawks and stuff like that. However, when it comes to charting, I am looking at one chart only. And I recommend that you do the same. I recommend that you do the same because you are going to go crazy trying to keep up with charting multiple stocks throughout the day. Yeah, there might be some days where there's stuff flying like crazy and you're just flipping back and forth between chart after chart after chart. And you could have a couple pulled up. And yeah, there's going to be days like that. However, I still recommend sticking to one chart. That's again, that comes down to what type of an option trader are you? If you are primarily scalping options, then that you need to be involved in that one option. You need to be watching that like crazy, and you need to not be worried about other positions at that time. So that's another thing. I would not recommend scalping multiple tickers at the same time. One of the things that people like to do is they like to be involved in multiple trades at the same time. And listen, I do that. I have numerous positions that I'll have open at the time. However, when I'm scalping something, I am only scalping one ticker at a time. I'm not scalping multiple. That's just not my style. I would rather focus in on the one ticker, and I would rather be successful with that one ticker and maybe miss a couple other ones. But for me to be in on that ticker and giving it my fullest attention, I think is one of the better ways that I can be a successful trader. So I will only have that chart pulled up. I will only focus on that options chain. And while I am in that trade, that's the only thing that matters to me right then and there. I'm not concerned about any of my other long-term positions. I've already determined that, listen, if I've got 30 days out, I'm going at least 20 days. If I've got 45 days, I'm going at least 30. I'm only concerned with the option that's in front of me right now. And again, my primary concern as a trader is to scalp options. That might not work for you. That's perfectly fine. Again, like a lot of people think, okay, because we got about 10 minutes left here. So let me wrap up and then we'll take some questions and we'll interact with the chat a little bit. Oh, excuse me. A lot of people think that because there's somebody on social media that uses a specific strategy, or because there's a certain person that they heard on YouTube, that means that strategy is guaranteed, or they've got to try to adapt themselves to that strategy because nothing else is going to work. And listen, that can't be farther from the truth. Why do I say that? Number one, because my strategy works for me. It might not work for you. When I am teaching somebody, again, I'm teaching them what I do as a trader, but I am also leaving that open for discussion. I'm allowing that person to evaluate what my strategy is. And if they don't think it's something that's going to work for them, I'm not going to tell them that this is the only strategy that works as a trader, because it's not. It just is not. It might not work for somebody else. I know buddies of mine that I trade with, and their strategies, it just does not work for me. And there's been times where I've been talking and we've talked about strategies and indicators and stuff like that, and I start to question, my strategies and things like that. But I've got to remember that my my strategy is what works for me. I've put the hours in on the charts. I've back tested. I've worked hard on that, and that's what works for me. Again, it might not work for you. That's fine. Again, it's okay if it does not work for you. That's the great thing about trading strategies. There are hundreds and hundreds and hundreds of strategies. Now, you might also ask yourself, I don't have a real strong strategy. I don't really know. That's a good thing to arrive at. Okay. That's a very good thing to say to yourself. And why do I say it that way? Because you need to have a trade strategy. And so if you are saying that you don't have one, that shows you exactly what you need to do first and foremost. With your trading strategy, what you need to do is you need to write down step by step every detail of what you do as a trader when you are involved in a trade. What do I mean? I mean, how much profit are you looking to take? 10 to 30%, 5%, whatever the number is, write that number down. Number two, what's your stop loss? How much of a loss are you willing to take? Are you going to risk 10%, 5%? Then write that down. Say you're going to set your profit target at this. You're going to set your stop loss at this. So every single trade you go into, you know automatically where you're taking profit and where you're going to stop out at. Another thing to know is how much capital are you risking? And that's something that people always ask me as well. Well, how much should I risk? How much do I buy? Like, you need to remember that your capital is different than my capital. My capital is different than somebody else's capital. It does not matter. It's just your system. And so what I trade as from a risk perspective is going to look different than somebody else. I might trade more. I might trade less. Just kind of depends on who we're talking about. Somebody said, such great profit this morning with a call option that I had for Neo. I bought it yesterday, planning on selling today. Since I can't day trade, it went down faster than me. I lost big time. Now, Rogeria, I hope I pronounced your name correctly. I apologize if I didn't. If you are concerned with day trading, if you are on a margin account, I would recommend switching to a cash account, because cash account does not have the PDT, the potential day trading restriction. With a cash account, you are able to enter and exit a position same day. You are only focused in on settled cash, and with options, they actually settle in one day. So if you are trading options, I primarily recommend you trade from a cash only account. Do not get involved with margin accounts when it comes to options trading. Again, let's all say this together. Do not get involved with options trading on a margin account. The reason why is because they are going to open up this world of different strategies of options that you can trade, and you're going to get yourself in a lot of trouble. Every broker is set up differently when it comes to options trading. Do you ever notice that when you are signing up for a new broker, they don't automatically give you options trading? And why is that? Because options trading is risky. Why do they only give certain levels? Why do they make you answer questions and stuff like that? Why do they unlock you at a certain level and then they increase you over time? It's because they're trying to look out for you. They don't want you to, now certain brokers, as soon as you sign up for an account, they give you the house. They give you all levels. They don't lock anything, and you can do whatever type of option trade you want to. But you have to remember that, like, if they're going to allow you to sell naked puts or naked calls or stuff like that, like, you're going to be on the hook for that stuff. Like, yeah, it might be cool to do that once in a while, and you might hit it once and get to collect that premium up front, but you're going to get assigned those calls, and you're going to be in a lot of trouble. You're going to have a lot of cash taken out from your account. So that's why I recommend to any options traders that are, again, primarily options traders, trade from a cash account. Even on I really honestly, like, if you are a commons trader, you should be trading from a cash account. You should not be focused in on a margin account. A margin account is there. It's nice. You don't have to worry about settled funds, and it's nice that you can trade every day if you want to and stuff like that. But man, listen, as we just saw here, there's nothing worse than a call going against you and you not being able to get out of it because you don't have any day trades left. Basically what happens is you just need to be disciplined with the amount of capital that you have. If you have a $5,000 account, you've got $2,500 a day that you can trade with. Just as simple. Just cut your account in half. That's what you can trade with every single day. Then you never have to worry about getting into these good faith violations. Good faith violation is what, if you are trading with unsettled funds. Now, depending on your broker too, a lot of brokers don't even let you trade with unsettled funds. They'll basically tell you that your buying power is this at the beginning of the day, and you watch it go down. And once you're out of buying power, you're out of buying power. Excuse me. Some brokers do kind of float you a little bit. It just depends on. I'm trying to think what's a good example. I think Webull has good faith violations. Like they will. Some of the brokers will let you trade with unsettled funds, but they're kind of sneaky about it. Like they will say it's okay, but then all of a sudden they're going to ding you for a good faith violation. And hey, listen, a good faith violation is much worse than a PDT violation. Good faith violations do not go away. Once you are dinged on a good faith violation, you lose access to a lot of stuff. PDTs, the pattern day trader rules are, it's first off, the rule is horrible. I think limiting 3 day trades in a 5 day period is just setting people up for failure. I think they need to get rid of that. I think it's an old rule. But again, like I said, you can get rid of that. Just switch to a cash account. They don't have to worry about it at all. You're not concerned about day trading. You're just trading what you have in front of you. I think that also helps you to teach you risk management. Because think about it, with a margin out on $2,000, it's showing that you've got $4,000. You don't have $4,000. You've got $2,000. You shouldn't even be trading with all your $2,000 in the first place. So setting yourself up on a cash account and then dividing your account up to show you how much you have on a daily basis to trade, that's a recommendation. That will help you to avoid that, because I've seen that so many times. People say, it says I can't day trade. It says I can't day trade. And you can. You can day trade. You just have to switch to a cash account. All right, 5 minutes left, folks. We're going to get wrapped up here shortly. So if you've got any questions, go ahead and drop those in the chat. Again, we are live every Friday night at 5 p.m. Eastern. My new modem, I think, actually just got delivered. And so I'm actually surprised that I'm going to jinx myself, I know, because I only have 5 minutes left. I'm actually surprised we lasted this whole entire hour without any issues. But it looks like moving forward, I have all of my equipment fixed and everything. So we'll be back on a regular schedule every Friday night at 5 p.m. Eastern, Technically Options, live here on the Benzinga YouTube channel. Another thing I do want to invite you to is tradinggrounds.live, TRADING grounds.live. That is my website, and that's where you can access all of my social media handles. You can access, I'm very active on TradingView in the social media, or the social aspect of TradingView. They actually have a section where you can post charts and you can post your work and things like that. I do that a lot. If you're interested in seeing the charts that I'm working on, or what sort of the indicators and stuff like that, and what kind of runs through my brain as a trader, you can go to TradingView or you can go to tradinggrounds.live and click the link at the top that says TradingView, and you can follow me. Another thing I want to invite you out to is our Discord channel. We have about 1,000 members on our channel, ITM Trading, in the money trading. We are a large community of traders, but it's an entirely free community. We do not sell any courses. We do not offer any premium services. We do not offer we do not offer any, like, we're not trying to get you in the door to sell you a course. We're not trying to get you in the door to upgrade your channel. We don't do anything like that. We're literally an entirely free Discord. I work with a lot of guys one-on-one. A bunch of the other guys in the channel work with people one-on-one. We have a main floor that we trade from on a daily basis, where we are interacting with each other. We're talking about trades. We're entering our trades into bots. You can see where we're buying and selling on a daily basis. We're letting you know what the volume spikes are and certain calls and stuff like that. And then on the weekends, we get together and we discuss trades, and we work on technical analysis and charting, and we are trying to be better traders together. So again, tradinggrounds.live, click the link at the top of the page. You will see a link to our Discord channel. You are welcome to join. My name is Brad. You can look me up on the channel and send me a message and say hi. Feel free to reach out to me at any time you want to for questions, for anything like that. But again, we are an entirely free community. We're here to help you as a trader, because I know how difficult it is to be a new trader and not have anybody to go to help you. Okay. That's the biggest thing I think as traders we need to remember. And I'm going to wrap up with this here. Trading is an individual game. It is me versus the market makers. It is me versus the algos. It is me versus the computers. When I am behind my screens, it's one-on-one. Okay. However, trading as a team game is much, much, much more enjoyable. I can't tell you how much I enjoy the people that I trade with on a daily basis. I have so many people, it would take me forever to name. But the guys and the girls that I trade with on a daily basis, it is just it is one of the biggest joys that I have in my life, that I've been trading with these guys now for a long time, almost a year and a half. We've been in this room. Enrique says, where's the Discord link? If you go to tradinggrounds.live, I'm going to drop the link in the chat here. Go to tradinggrounds.live. Oh, everybody else is on it too. Okay. We go to tradinggrounds.live. It is a link at the top of the page. You'll see a link that says Discord. You click on that, and yeah, you just plan on joining us. I mean, again, we're a free channel. You are not required to be a professional trader, not required to be anything. If you are a brand new trader and you're looking for a group of people to trade with, come on and join us. Again, if you would like to just work with me individually, if you have, some questions that you'd like to ask, you didn't get a chance to ask during the show, listen, I'm more than happy to help. My DMs are always open. I am available. I'm in front of my screens all the time, Monday through Friday. I do have a newborn son that takes up a lot of my time and energy. But for the most part, during the week, I am in front of my screens. I'm lucky enough, I'm blessed enough to be able to do this. And that's why I like to give back, because I recognize how lucky I am. I recognize that there was so many people that set me up to be in this position. And me, as somebody who naturally likes to teach, I like to give back in that way. And that's why I like to offer stuff, for free. That's why I like to teach people. That's why I like to answer questions. And listen, if you ever ask me a question, I'm never going to laugh at you. I'm not going to tell you that's a stupid question. I'm not going to mock you. I'm not going to be mean to you. I'm going to help you. I'm going to walk you through stuff. But another thing too is I'm not going to tell you when to buy and sell. Like, that's not my goal as a teacher of trading. My goal is to be able to get you to the point to where you look at the chart, you see, this is where I buy, this is where I sell, because that's more important than me telling you buy here, sell here. Alerts are great, scalp alerts and stuff like that. Absolutely. Those things are beneficial. But I'm saying, from my perspective, what I am as a teacher, when I'm giving back to the community of traders, I am teaching you how to recognize those things. So again, tradinggrounds.live is my website. Please head on over, follow me on all social media platforms, join us on our Discord. The link is at the top of the page. And man, listen, that's pretty much, we got like 60 seconds left. If anybody has any questions real quick, we'll give it a second here. And if not, we will wrap up, and we'll be back next Friday. Can you believe it's Friday? Can you believe it's June 18th already? Oh my gosh, man. I don't know about you guys, but I'm not a fan of hot weather. I do not like the heat at all. I like the cold. I like, I'm a cold weather guy. I love the snow, and I love cold weather. Can't stand the heat. So when it gets to June, I'm kind of like, okay, all right, we're halfway through the year. I live in Northeast Ohio, so we've got like 4.5 months left. I can do that, right? Like, we're almost there. So, all right, guys, well, I'm going to cut you out of here. I appreciate everybody tuning in tonight. Make sure you hit that like button, please. We have a very small amount of likes on the stream tonight. We had a lot of views. We had a lot of people that tuned in tonight. Really hot in Orlando. I actually used to live in South Florida, so I remember that heat. But I do not miss. That's why I say I used to live in South Florida. I no longer live in South Florida, but I remember that heat. Oh my gosh, that was June, July, August heat. That's a doozy. But anyways, guys, have a wonderful weekend. Send me a message, like I said, on tradinggrounds.live. Let's chat. Join the Discord. We'd love to chat on there. If not, I will see you guys next Friday, 5 p.m. each time. Have a great weekend. See y'all.